Thank you for joining me. I'm Alexandra, and I want to talk about Goldman Sachs. We've done Bank of America, Citibank, Wells Fargo, and they all had their PE trending upward, mostly because of their earnings trending way downward. This seems better, but also bank, quite obviously. Current stock price $327, which gives them a market cap of $111 billion. So compared to the other ones, far smaller, shockingly. Revenue $44.6 billion, which is up a third, which is nice. All of the others had revenue declining. All of the others had earnings declining quite significantly. Goldman Sachs, the only one that didn't. So earnings up to $9.5 billion, and that gives them PE of 13 with a forward PE of 11, which is where pretty much all of the big banks were last year. They were all around 12, 13-ish, which I think is pretty decent, and at that price I actually bought some of them. Dividend yield 1.5% with a payout ratio of 20%, which is decent. It's not great necessarily. Obviously, if you're looking for high dividends, this is definitely not, but it's not nothing. Total assets $1.1 trillion, total liabilities $1.1 trillion, gives them a total stockholders equity of $95.9 billion, which is also up. Not surprising. So everything going decent. I don't like the balance sheet being this balanced, shockingly. I know it makes no sense. Stockholders equity also very close to the market cap, which is a very good thing. Citibank, I think, the stockholders equity is higher than the market cap, which is obviously even better, but definitely not a bad balance sheet for a huge bank. Risk factors. I don't really think there's any new risk factors. As I mentioned before, oil gets financed, or oil drilling gets financed by debt, and the banks kind of sort of get stuck with that. So if that ever goes south quickly, that might be a problem. Overall, though, it seems like everything is staying pretty much where it is the previous years. Again, all of the other big banks took a huge hit from COVID, so that would be a risk factor, but overall it seems to not have affected Goldman Sachs at all. So for a growth investor, obviously big banks still not great, even though revenue growth of 30% would indicate a pretty decent growth stock. I definitely wouldn't buy it for the growth because it's a big bank. There's a limited amount that they can do to grow huge numbers. So I would expect the revenue growth to go back to a more normal, 5 to 10-ish%, maybe even be negative with the regulations going back to normal, which might happen. For dividend investor, I think that the stability and the safety of the principal is pretty nice here, so I wouldn't blame anyone for buying this. Obviously, if you're looking for better dividends, there is other stocks that provide that. So as a diversification play, I definitely recommend this. For a value investor, I think that pretty much everything looks pretty nice here. So balance sheet is decent, PE is decent, dividend is a nice bonus, company is very stable. So if you're a value investor, I think that this stock looks pretty interesting at this time. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.